Hi there, traders. This is Brad Gibble with FX Market Insight for Tuesday, the 23rd of June. Right, it's coming out of the freshly coming out of the North American session. Now, some interesting moves to start the week, and this is a bit of a heads up too why trading on Monday can be a little bit problematic. Right, so if we just look at the dollar index, for example, we had this nice uptrend. Everything looked really good. You come across and let me just give you a look at the other charts. Everything was sort of moving in the right direction. Okay, we had, well, we didn't have the Aussie there, but we had the Aussie sort of going down, Kiwi sort of edging lower, the Euro trending lower, and Sterling in particular. Now, what's happened over the course of the day is we've seen a couple of variables come into play now that the US numbers, and I had this listed on the macroeconomic fundamentals. It's very important to sort of keep a close eye on these because they do seem to be coming into play. Now, the existing home sales numbers, okay, down 9.7%. That was enough to give a bit of a negative spin on the dollar. And that saw, the dollar index, as I said, just sort of break down through this 97 sort of 30 level. Now, it hasn't really overshot just yet, but those weaker housing numbers have put a little bit of a positive spin on the equity markets, right? So weaker numbers on housing, then what you would expect is the Fed need to do something else. If anything, they keep interest rates at a lower level for a longer period, and that gives investors a bit of a risk-on appetite, and the equity markets rally. And we do see, say, the Aussie, Kiwi, and the CAD rally for that matter. Now, dollar CAD was an interesting one yesterday. Once again, just having a look at the setup from the weekend. Now, when you do look at the pairs here, okay, let me just actually blow this up. Might make it a bit easier. It was quite interesting, right? So we had the dollar sort of weakening last week, and it looked for all money that dollar CAD up the top here was going to shoot to the top side. As I mentioned yesterday, there was a really weird setup in the situation of oil. I think it was sitting around sort of $39. Now, they're moving in opposite directions. Something's got to give. Okay, it was either oil or the dollar or CAD for that example, for that instance. So, but what has happened is the weaker US numbers, okay, have given the US dollar a negative tone, and dollar CAD is now in sync with oil. Okay, as oil moves above $40, market must be massively short, expecting some issues with storage as the futures roll over. It's now sort of corrected itself as well. Now, part of the story is the slight existing home sales numbers. The other part is, I think this is the first sign, and it's important to recognize this as early as we can, where we start to get the data, right? Especially as far as the coronavirus goes, South America and actually North America itself. A lot of US states are experiencing coronavirus spikes. This is at the same time that it's not being replicated across the UK. The UK is actually opening cinemas and a whole range of other things. So you know what? Bad US numbers, increasing spikes in the US. This could be a very isolated situation where the US now gets left behind, okay, as all the other economies open up. Now, I'm sure this will spread globally. Don't forget, international borders are generally shut. So it's going to be interesting to see how it plays out. So the US dollar safe haven trade is not clear cut because it's not the whole globe that is impacted at the moment, right? It's going to be US based. It's going to impact the US economy. And that's where I think we're going to see, a shift, a fundamental shift from the US dollar rallying on a safe haven to now the US dollar falling because it's going to get left behind by everything else. And that's the way I can see it happening just at the moment. It's a bit of a fundamental shift. So what I would like to see, because it's like day one of a change of structure of the way the markets have been moving, is actually start to have a look at the charts. If anything, give it a short period of time to see what's going on. If this sort of maintains its course and say the spikes increase and some of the US states lock down, well then, and the dollar falls, we know exactly what the answer is. Because the rest of the globe isn't going full wave two, then we might see these pairs start to really rally. Now, one interesting setup here is Euro hasn't had enough momentum to sort of break through that resistance line yet. But I tell you what, there's going to be some stop losses above the market, you know, just up here. So I would expect that to really shoot to the top side if we do get a little bit more weaker data. So to me, the fundamentals are coming back into play already, especially for the US dollar. Sterling, well, you can actually see what happens there with the as it blows through a resistance level. Okay, crazy price action. I mean, that's not easy by any stretch. So I don't think a break trade on sterling was going to be a result. You would have got cleaned up on that. But this level up here around 125, sort of 25-ish, 125.30, that's the next big level. And this is a correction from the currencies were starting to look like they were going to start trending. To me, a lot of them will be back to sideways. If anything, potentially just flipping over from a down to a potentially uptrend. Dollar CAD, for example, sort of going up sideways, now shooting straight back down, going with oil. And once again, the one of the things that you can look at as a bit of a benchmark is dollar yen, right? You wouldn't even know anything was going on. So this is a bit of a dollar play. I think it's a shift. I'd like to get another day of trading confirmation out of this to see exactly where things go from here. But one thing I'll be doing from here on in, and I haven't sort of paid a lot of attention to it, is the fundamentals, right? This is where you're starting to look at the numbers again. Really, these are going to come back into play. We've got some coming into today's trading. We've got some flash manufacturing numbers out of Germany, the Eurozone, and the UK. I tell you what, there's not a better time to see this data. We get an improvement in the European and German manufacturing numbers in particular. This is going to be the catalyst for us to see a spike in euro, above this 112.60.70 level. You can see where it's sort of just wrestling with the market there at the moment. And that should give us a spike up into the probably mid-13s, 113s. Anyway, that's how I see it at the moment. It's pretty interesting, all right? I like the fact that the dollar's getting hit with weak data and also the isolated increase in coronavirus spikes. So let's just see how that plays out. I think with the upcoming elections and Trump, you know, I think in his speech yesterday, his first re-election speech, he was saying, let's slow down the testing, right? Because that's obviously producing a bigger result. So that's one hell of a way to, you know, stop finding out who's got the bug, that's for sure. But we'll see how this plays out. You know, and sorry, just the other side of that, just to finish up, if there's no major change and the US dollar, it calms down with all the lockdown stuff, as in the spikes, well, then we're going to start to see some sort of up-down volatile markets, but overall trading sideways. So that's something to sort of be aware of as this sort of change in focus develops. All right, guys, have a good trade day. Cheerio.